Hello and welcome to Francis Financial's monthly investment insights. Every month, one of our advisors brings to you the trends we're seeing in the market, how that's impacting portfolio strategy, and what we're doing to help protect and grow your wealth. And I'm Avni Ramnani. I'm the managing director and partner at Francis Financial. And I'm excited to bring with you and share some of the things we saw in the market for the month of October. October was a peculiar month overall. It was basically a month split in two halves. Earlier in the October, it was the markets were low, impacted by the high CPI index information that came out at 6.6%. Right now, as we know, the inflation is basically influencing what's happening in the market. And so when that data came out at that 6.6%, the markets really took a big hit. However, in the second half of the month, markets turned around and rallied big time. The reason being that, yes, while the Federal Reserve did increase interest rates by 0.75%, they did give an indication that the increases may not be at the same big rate that has happened in the past. So the market took that news very positively and really rallied. Now, for the month of October, pretty much all the numbers, all the market segments were up. We're still down year to date. So starting from the beginning of the year in January through October, the indices are down, but October proved to be a really good month. So much so that it was the best month that the Dow Jones Industrial Average has had since 1976. So as we always say, you cannot time the market. Timing the market is just not worth it. It is more important to stay invested in the market because these are the times, these turnarounds that we see are unexpected many times. And these are the ones that make a huge difference in the overall growth of your portfolio. What else was going on? Elections. Thankfully, that's over. So you won't be seeing as many ads on the TV as you were before. And historically, we've seen that the year after an election year is a good year. In fact, the markets rise, the total return in the markets on an average is about 18.6% compared to a return of about 10.8% in all other years. So we are hoping that now that the election season is done, at least the midterm election season is done, that 2023 brings some good news for the market. Markets anyway don't like uncertainty. So, knowing who's in power in the House, in the Senate, and the presidency is all a good sign for the market. And they do like divided governments because, the assumption is that they can do less harm. So we're hopeful with this, at least from the election perspective, but then there are so many other things influencing the market that it's really difficult to predict anything. Something else that we want to share with you is mostly around the inflation. Inflation is right now driving the market, and it continues to be sticky. We did get not great numbers for September. It was down, but very minimally. CPI index was at 8.2%. The core CPI index was at 8.2% for the month of September. And the annualized core CPI index, which means that if you look back 12 months for an average, that index had its largest increase in September at 6.6%. Now, what happened in October is very interesting because what's going to happen is that when November numbers come out, we'll see that. So the way this average is calculated is that there's a 12-month look back from the month that you're in. So right now, calculating the numbers for October, they look back starting in October through the October of 2021 through September of 2022. Now, when you see on this chart, the numbers for July, August, and September 2021, the leftmost 3 bars on the chart are low compared to the other bars that you're seeing for starting in October 2021. So those 3 bars gradually, every consecutive month, one of those bars dropped from that analyzed index. And now the bars for October 2021 is where things started. Now, when we know that next month these numbers are calculated, the bar for October, which is pretty high right now, will be dropped and be replaced by a bar that is much lower. So the hope is that the annualized CPI index has a downward trend, which will be positive for the market. So we're looking forward to that for sure. What else is going on? Earnings are happening, and the third quarter earnings, about 20% of S&P 500 companies have reported so far. 72% so far have beaten expectations. On an average level, typically 77% of companies beat expectations. So it's not too bad, but it's not where it usually is. Companies are able to pass on prices to consumers, but they're a little bit worried of how much and how long they can continue to do that. The good news that came out was Q3 GDP numbers were positive. They were at 2.6% on an annualized basis, which is a healthy number. And if you remember, in Q1 and Q2, we had negative GDP growth, which was an indication of recession. But at least from the GDP perspective, it looks like Q3 we're in the clear. Let's see what Q4 brings, and then of course Q1 of 2023, but so far we're in the positive. Some interesting notes about October historically. October has had, on the one hand, been a month with some of the worst market days. Black Monday in 1987, stocks fell by more than 20%. But October has also marked the beginning of a recovery from a bear market. And there were a few years that has happened. Now, whether October 2022 is that month that might go down in the history of similar Octobers in the past, we don't know just yet. But that we're going to keep a positive attitude and look forward to a good Q4 and hopefully a good Q1 in 2023. There are a lot of things that influence the market, but we're going to stay positive. That's it from us. And if you have any questions, please feel free to reach out. These videos come directly to you in your inbox, so feel free to share it with someone if you think that they might benefit from it. Thank you, and we'll see you next time.